Okay, short trading week. This week we have an abbreviated session on Christmas Eve tomorrow. I will be taking off Christmas Eve and Christmas Day. My next post will be on Thursday. Spending time with my family on Christmas Eve and Christmas Day. We'll just get a partial day, an abbreviated session there on Tuesday tomorrow. So again, I'll be doing a video on Christmas Eve or Christmas Day. Check back on Thursday, but I get consumer confidence sharply dropping. Was expected to be at 113, came in at 104.7, lower than the previous reading at 112.8. We have durable good orders going negative for the month of November. No economic data scheduled for Christmas Eve or Christmas Day. The market was up today. We had the S&P 500 rise by 0.75% to close at 59.74. We had the Dow rise by 0.16%. NASDAQ up 1%. The Russell down just over 0.2%. Declined by 8.61%. Please support the channel with the link directly below that allows me to be able to provide you this information. You like the chart, you like the indicators, please let me know that by supporting the channel today. If you follow the link, it'll take you to a secured site and you can donate any amount you want. If you could take a moment to do that, I would really appreciate it. I don't have any sponsors. I turned all those offers down. Just a direct relationship with you. Turn those offers down because I don't want to sell you a bunch of stuff. And that's how the majority of the money is made through YouTube channels. So if you could just take a moment to help out, I would really appreciate it. I just want to take a moment to say Merry Christmas to everybody. I wish you and yours a very Merry Christmas. Again, momentum is bearish. We got the momentum lines turning bearish, and then have the bearish reversal of conditions. So that's got to change if we're going to get a rally back up. The risk is we get a bigger sell-off if momentum, like the momentum line here, remains bearish. NASDAQ daily chart here. We got to see momentum turn back up and things like the MACD and the RSI as well. Those daily charts. Same thing here on the S&P 500. Things are bearish at the moment. If they remain that way, we can go lower. Again, momentum here with the oscillator is lower. We have red bars. We have a red cloud. We've got a red ribbon. So again, we're seeing the momentum line. When we were going sideways in the triangle, it had turned bearish, and then we got a reversal of conditions. This remained bearish. It's still pointing down. So again, momentum, if we're going to rally, you've got to see momentum flip back to bullish. Right now, it's bearish in the daily time frame. It's bearish on the intraday charts. Turn back to bullish if we're going to rally back up over the holidays. There's risk of a bigger sell-off. Again, my next update will be Thursday. I have an abbreviated session on Christmas Eve. It'll be closed for Christmas Day, so I'm going to take Christmas Eve and Christmas Day off, spend that with my family. I got a lot more to share with you. Watch the video all the way through, and watch the video all the way through. You'll see what's going on with Nvidia. That could be giving us a clue to what could happen. Important charts in the video on Nvidia. And once again, I want to wish everybody a Merry Christmas. Let's take a look at some more charts. NASDAQ 100, it was up 214 points, up 1.01%, so just over 1%. And we got above that 200 today again, pulled up to the 200. We had the initial gap down on the PCE data. We rose up to the 200 and then just kind of kept getting rejection there as the 50 got back above it. And then with today's session, we gapped higher, pulled back, went a little bit lower to fill the gap, and then got above that level here in the 200, back above the 200 period moving average, the black line right there, and the 50 remained above it. So again, in the holiday trading, we can see manipulation up or down on an extremely light volume. I think the S&P is likely going to make it to my target level. Now we have NASDAQ above the 200 period in the 5-minute time frame. S&P as well. Again, the gap lowered with the PCE, went back above the 200. The 50 got above it, and then we pulled back. And then again, some volatility at the start of the session, but again, rallied back up towards the highs of Friday's highs there. And again, the 50 remains above the 200 here in the 5-minute time frame. So far, this divergence has given us rally. Again, will this divergence and these smaller divergences, and we had one in the 60-minute time frame, these smaller divergences lead to just bounces or reversals. The divergences in the 60-minute time frame mean more larger time frame. Talked about the divergence there on Friday. We talked about the gap lower, the hollow red candlestick, and the bullish divergence here on the RSI. Told you we didn't have one on the MACD and still might try to form one. That's possible. But again, it may be that we don't. Again, MACD here, we had one right here, right before the election rally, and here we did not after the pullback occurred. So again, I told you which will this be, and we'll be watching, can the MACD get into positive territory, and if it does, we can get a bigger rally. I'm watching the rally as we move up. We have horizontal resistance directly overhead. It was support, our triangle, our back test of our triangle directly overhead, and our moving averages. The 50 is crossing below the 200, so there is still risk. The VIX was predicting a down day today. It did not happen. The VIX also got a of greater than 10% there on Friday. The VIX dropped by greater than 10% there on Friday as well. We had two drops of greater than 10%. So the VIX is still predicting a down day tomorrow. Again, it's not for day trading or whatever. It's just predicting short-term moves based on probability. Again, I talked about how we had this big bar over here, this bar right here that we had of 74% surge or 74%. That could possibly mark a bounce or a bottom. As I've said, we are getting a bounce, S&P 500, and we'll be watching. The 50 is still above the 200 here. We'll be watching what happens during the holiday trading session, or sessions, I should say, this week and next week. So if the S&P can start clearing the moving averages and clearing these levels, then again, we can still try to recover, moving back above 6,000. If we have the bearish cross right here, act as resistance, we get rejection at it, then there's still risk of another push down. So we'll be watching. And if you do see that happen, you can get a divergence on the MACD right here, and you can get another reference point of a divergence here on the RSI. We could see, another push down for another reference point of a divergence. So we'll be watching to see how it unfolds, but we are getting a bearish cross on the 50, the 200, and again, signals as far as momentum are concerned remain bearish. The 5-minute chart gives us a bigger rally up. This is the area you want to be watching, this low 6,000 area or just the high 5,900 area. Currently, we're in the high 5,900 area, but a little bit higher. Right at the moving averages is right where 6,000 is here on the S&P 60-minute chart. See if we see the MACD roll over, get a divergence in this area, or if we can rise back up and try to clear these levels and get the MACD back in positive territory. Abbreviated session tomorrow. Again, momentum has been turning up here in the 60-minute chart, but again, still may try to fill this gap at 57.83. We came up here, bounced just off of gap support, just slightly breaching it, and we're rebounding back up. So we'll be watching these areas. Now, again, the 50 crossing the 200, if we can get back above it, maybe it turns right back up quickly. But if we get rejection in this area or go up and back test the lower boundary of the triangle or horizontal resistance, as I mentioned, then again, there's still risk of more volatility. Flip the signals back to bullish with momentum, and we're not there yet. And as what I'm watching is, are we just getting a rebound to back test? We're back above the 50. We had dropped below it briefly. We closed slightly above it there on Friday, and we're holding above it right now. After trying to dip below it intraday, we recovered, but you still have the 10 and 20 directly overhead. You still have the trend line here. Are we just going to back test the trend line, or including the shadow just a little bit lower here? The S&P, if it can clear that level, get back above the moving averages here, and the 50 and the 200 on the 60-minute chart, the 10 and the 20 here, the trend line, get back above this horizontal support, now turned resistance right here, which again is intersecting right there at the trend line. If we can clear these levels, then we can get a bigger rebound back up. I talked about over the weekend. Again, we'll be watching. Again, you could get manipulation up or down. Now, so far, we're going up. We're going to be watching to see, does the RSI end up forming a larger divergence here before all is said and done? Or again, do we get rejection and just a back test? If we do, you've got horizontal support down here, and you've got your gap down here, your gap fill at 57.83. So just some levels we'll be watching here. If we have a back test here, we can go down to this level and still try to bounce, or just fill the gap and try to bounce. And if we can clear these levels, or if you stall there and you pull back a little bit and clear them, then again, we'll be watching the trend line from the July high still, and we'll be watching the other trend line here, the black trend line going back here, which was the upper boundary of our rising wedge. So just some things to be aware of. Same thing with the MACD. Now, we're coming up to the 50 level here, and again, if we pull up to the 50 or just overthrow it, do we just get the back test and turn right back down, or do we hold above 50 on the RSI? Does the MACD, whoops, sorry about that, does the MACD start firming up at the center line here, or does it go negative? Stochastic is recycling back up with the session here in the start of the week. Now here, if we look at the momentum cloud, it's right there. Momentum cloud is right there where the trend line, the broken trend line is, and here I've included the shadow right there, and the overhead resistance, that dotted red line. Above that, you have the triangle, and again, if we can clear that level, then that'd be a sign of strength. If we get rejection there, sign of weakness, the gap fill and horizontal support then come into play. Our 200 below those levels down over here. Technical damage in that we've broken the trend line. Well, we broke the trend lines back over here, the blue trend line here and the red trend line here, but you never got confirmation of a fall through. Here we broke the trend line. We got, well, sort of a confirmation of that. I mean, by a couple of points, not, a whole lot of conviction there. We went lower, but then we got a reversal bar closing back above the 50. So again, you did get a confirmation, but no follow through to the downside. Could we just be in back test mode? We'll be watching. But like I said, if momentum signals all begin to flip back to bullish, then we can resume the advance. And if the signals remain bearish, then the gap fill over here and the horizontal support then come into play. And we could end up forming a larger divergence on that RSI. Now, I'm also watching momentum here on the S&P. Again, if we're backtest mode, do we get a push down harder? And again, if we do, then you got the possibility of a channel here, this dotted line here, parallel to this line right here, the upper boundary here. Channel parallel to this boundary from the July peak would be even lower than that, closer to the 200 period moving average. But you got your 100 period moving average here at this horizontal level of support. And again, this is from the July peak right here, just below our gap fill. So we'll be watching that if we end up back testing. Okay, if we clear this level, we get back above it and we see everything revert back to bullish. Can we form a divergence here to take us higher above this peak over here? I still think there's a strong possibility that will be the case. May get a bigger sell-off before it happens and still have it happen in January. I believe a peak will form in all likelihood in December or January. Can't move to new highs, and you got a shot that maybe that's it. But again, S&P reach that upper boundary of the channel in the weekly time frame I've talked about. We'll see what happens. Does momentum continue to slide and become oversold over here, or do we have it turn back up and end up forming a divergence like what we had happen back over here before that sell-off, and like we had happen over here in the July peak there. Going to be watching again all these divergences marked major sell-offs. This is a multiple point diversion, so again it could mark a reversal, complete reversal, and usher in a bear market. But we still may attempt to go back up to that upper boundary here if we can recover immediately. MACD is now rolling over. Keep in mind, we had that over here. We had several MACD rollovers right here with this divergence right here that formed in the price action right here, and even back over here. You tried to roll over a couple of times and you turned right back up. Do we see something like that again? You ended up getting a little divergence in the more recent price action right there, and formed this larger divergence with the peaks back over here. So again, on the MACD, we got a larger divergence, much like what we're forming right now. Does the MACD do something like that again? We'll be watching. Starting the week off with the MACD rolling over, did we end the week that way? We'll be watching. And again, here is the Weekly chart close up here so you can see it. Again, we just fell short of that upper channel line, whereas the Dow and the Russell hit it. The NASDAQ composite hit it, but the NASDAQ 100 fell just shy of it, and S&P missed it. So again, possible that we end up seeing a divergence before all is said and done, before the S&P and the NASDAQ as well. They do often diverge, as I've talked about. Now, here's the S&P 500 daily chart. Again, momentum is still red. A bearish reversal of conditions reflecting momentum, okay? Now, it could flip back to bullish like it did over here just before the election. Just get a back test and we push back below the 50 period and we, move back to fill the gap or start testing horizontal support here. Could end up getting a bigger sell-off. So again, the momentum signals remain bearish. They've got to turn back to bullish if we're going to get a bigger rebound back up. Still may happen if we get a bigger sell-off. If we're going to get it now, we got to see these signals flip back to bullish. We got to get back above the 10 period here, which is now across the 20 period. The 10 period is the red line there. Momentum actually went negative here, but we are seeing again the MACD come to the center line and the stochastic trying to flip back up. We'll see what happens. Stochastic can remain pegged at extremes for an extended period of time if we're just getting a back test of the trend line. So we'll be watching to see if things change here with momentum or if it remains bearish. But keep your eye on the back test trend line. It's directly overhead as I showed you on the other chart. P daily here. P is getting our second red awesome oscillator bar. The MACD is rolling over here as the histogram is going negative. The stochastic is breaking the 80 level, so we'll be watching. And do we get a reversal of conditions here eventually or not? Or do we try to go up and get a rally? Again, the market can be easily manipulated up or down during the holidays here, so watching to see which way it goes. Now, right now, momentum is still bearish. They're in the daily time frame. Watching the Dow to see if it, the Dow and the Russell, they've had a bigger sell-off. They can try to recover. Do they try to recover around their 100 period moving averages not seen here, or do they drop down to the 200 period moving averages? The Dow does have, again, horizontal support, as I've talked about, directly below. So we'll be watching to see if there's an attempted recovery here for Friday's intraday low. We'll be looking if we attempt to rebound over the holidays or get a bigger sell-off. Same is true for the Russell. Do we start getting some green with the awesome oscillators and attempt a recovery, or end up getting a bigger sell-off before all is said and done down to those 200 period moving averages? And the Russell was down just over 0.2% today. NASDAQ still holding above the 50. NASDAQ got back here above our 20 period. We're still below the 10, the red line right there. The blue line's the 20. We got a rally on NASDAQ again, 1% higher, 214 points higher. Again, watching. Does awesome oscillator go negative? P is now going negative, and the Dow and Russell have been negative, or does it eventually try to turn back up to positive? And if so, do we get a lower high, or do we set up a larger divergence? We'll be watching NASDAQ here. Oscillator remains in positive territory, but we continue to get red bars. And we still have a bearish reversal of conditions for the NASDAQ. Red cloud, red bars. We're still below the 10. The 10 has not crossed below the 20 as we have with the S&P 500. But again, you do have red bars, a red cloud, and bearish reversal of conditions regarding momentum. Going to be short-lived, like some of these other moves back over here, where it was just brief, or again right before the election, or do we try to take out that 50 period moving average? NASDAQ daily chart. The S&P is getting its second awesome oscillator red bar. Our second red bar on the awesome oscillator in the weekly time frame. We don't have one yet on the NASDAQ, so something worth paying attention to. Stochastic is rolled over. It's right at the 80 level here. Again, you get 1 bar per week. We'll see what it looks like. We still have the divergences in play, but again, no red awesome oscillator bar. Do we get one this week? Do we bounce here off the 10-week from last week, 10-week moving average, or do we go back and try to take it out? Again, momentum has got to flip back up in the daily time frame if we're going to get a rally. NASDAQ broke the trend line, bouncing off the 50 period moving average again. There was no confirmation, no follow through to the break of the trend line now. So again, you got to have confirmation of fall through if this is going to mean something. Do we end up going back up on lighter volume and forming a divergence before all is said and done, like we had over here, like we had over here? Do we end up forming another divergence? We tagged that upper Bollinger Band. We got the inside day, the bearish inside day. We had a 2-day bearish harami, and we had that sharp reversal. We dropped 3.60% on the Fed day, and now we're attempting a recovery back up. So we'll be watching. Do we get a bigger drop below the 50 period to try to come back and fill, again, the presidential election results a gap higher right here, or test our 100 period? But right now, we're trying to get back above that broken trend line, and you don't have confirmation and a follow through. So again, we'll be watching. Does momentum just start going down and we end up with a lower high and get rejection and go to the 100 or the 200 or something? Or can we recover and we see, everything, the momentum turn back to bullish, and we end up forming a divergence over the holidays? We'll be watching. Right now we're getting a rally. We've closed back above the broken trend line here on NASDAQ. NASDAQ dropped 5.5% from the Fed day. Again, we peaked. We had that inside day before the Fed, and then we had the drop, and we broke this trend line, and we sold off by 5.5%. Hit the 200 here on the 60-minute chart, now attempting to recover. The 50 has not crossed below the 200, like what we're seeing happen with the S&P 60-minute chart. Got a bullish divergence right here, and again, we are now attempting a rebound. So is it a counter trend and we get a bigger sell-off, stalling maybe at the 50 or the cloud or something, or and end up coming down, maybe go a little higher and then come down and get a larger divergence? Or is this divergence marking a bottom, the simple divergence, and we attempt a bigger recovery and maybe try to take out that high, or get a Fibonacci retracement and then go down? We'll be watching a 78.6 or 61.8 Fibonacci, something bigger. So just some things to be aware of. Same thing here on the MACD. Look at the MACD. There is no divergence. This is just marking our PCE rally here with a gap lower, and it was a gap and trap on the intraday charts, at least so far. Does this go positive with the MACD? Does it go positive? Or does it roll over and we get a divergence? We'll be watching to see how it unfolds. And again, market manipulation. Every time you get into the holidays, every time there's manipulation, extremely light volume. See if it's to the upside or downside here. Now just real fast, this is a log scaling right here. With the log scaling, we broke it. We came right back up to it, back tested it, and got back above it. With the linear scaling, a little bit different. That's why I always look at both, especially daily and the weekly time frame. But here, the linear scaling, we got back above it a little bit higher there on the previous session, and we're holding above it here. So this is a linear scaling. We're going to be watching, do we end up getting a larger divergence develop, or do we end up going lower? And again, coming back to some of those other levels I've talked about, and end up coming back down and then getting a rebound later? Or do we get it right now? Do we get a rebound and a lower high or a higher high right here, right now? One or the other. We'll be watching. The MACD is rolled over. It could still get a divergence here. So just some things to be aware of. And again, key support with our July high there on NASDAQ, our July peak. Key support just below the 50 period. We're bouncing just above that 50 period moving average. Just like the 60-minute chart, the 10 is still above the 20 period moving average. On the 60-minute chart, the 50 is still above the 200. And again, we're just shy of this trend line right here, this upper boundary trend line right here on NASDAQ 100. We overthrew this channel. Now, one thing that's interesting on this channel in the weekly time frame, this is from the pandemic low to the October 2022 low, the 2021 high. And again, we slightly overthrew that trend line to attempt to test this one right here. But with the NASDAQ composite, we slammed right into it. Well, NASDAQ 100 overthrew that level. The NASDAQ composite, including all the tech stocks, that reached this level perfectly parallel right on the nose there. So I'm watching. Again, we overthrew it on the NASDAQ 100. Here on the NASDAQ composite, we turned just off of it. So interesting. especially given all the trend lines I've been talking about that we've been turning down off of. Also, the more recent channel, NASDAQ 100 did reach that upper boundary as the NASDAQ composite did reach the upper boundary. NASDAQ 100 came just shy of it. And again, they both have divergences that are developing on the RSI and the MACD. This is NASDAQ composite weekly chart. Now, this is the same scaling. This is linear scaling right here. And again, we didn't quite reach a trend line right here, parallel. And again, here, I'm connecting this point, and a parallel boundary up here. So the red line excludes the shadow. We did tag that, but again, the divergence is there. So just some things to be aware of and paying attention to. We still may come back up and reach this trend line. We'll be looking for clues, but like I said, it's possible. We had the NASDAQ rally. Well, the Dow and the Russell went down, the S&P went sideways, and NASDAQ was making new highs. NASDAQ 100. Do we now see the opposite happen? Do they all attempt a recovery and NASDAQ ends up selling off? It'll be interesting. But we do have another trend line to be watching, and that is with the log scaling here in the weekly time frame. And again, just connecting these levels that's directly overhead, something worth paying attention to. And again, I look at both the log and the linear, but we'll be watching these divergences as they carve out. Do we buy more time? What happens? We are trying to bounce off this trend line right here in the weekly time frame here on the NASDAQ. Now we got a big rally on Nvidia helping out NASDAQ 100 today. Nvidia up 3.69%. Again, rebounding. We talked about that hollow red candlestick that we got last week. We're rebounding back up. We're getting above the 10 and 20, which did get a bearish crossing below the 50, the green line there. We're getting a rally back up to that 50-period moving average. Could backtest the broken trend line, but I told you we could also still see further consolidation here. Or if I'm wrong about this peak right over here surrounding earnings, we could still go back up and slam up into the trend line in the weekly time frame here in the daily time frame, move towards this trend line here, which would likely be very, very close to that weekly trend line I've been talking about. We turned down off of it right there, but you got to break the trend line in the weekly time frame, validate that peak off of a major trend line also in the weekly time frame. So we'll be watching. We dropped 14%, rebounded. We halted right here at horizontal resistance. We dropped, we broke this support level and got that hollow red candlestick. Now we're going to be watching what happens. Are we just back testing, or do we get a bigger rebound? We're bouncing off the major trend line that I've been talking to you about every single week. I've been talking about this trend line. We've got this triple divergence going on, but I told you it could be that if we don't see the head and shoulders, we could get a 3 drives to a high. Going back would be 3 drives to a high would be 1, 2, and then another one up here, a third drive to a high, if the head and shoulders does not play out. If it is a 3 drives to a high, we can go right back into this trend line right here. But look at where we're bouncing. Trend line right here, we would go back up into that trend line, and that would be the trend line also in the longer term weekly chart. This channel is a level where we're trying to bounce on our 20-week moving average. Off right here, another trend line, a longer term trend line, not the one up here, but another channel, not this one. But if this channel breaks, I think it will terminate the bull market. I told you to be watching. Do we get a bounce here, or do we break? Right now we're trying to bounce, so we got a candle of indecision there last week in the form of a doji here on our weekly chart for Nvidia. So again, could see a rebound in the market. Nvidia rebounds, and again, manipulation on lighter volume up or down. We'll see if this trend line breaks with Nvidia. That would be very problematic for the NASDAQ and for the AI rally. Now, the channel you just saw is this channel right here, and we're bouncing. Okay, we could go back up to this upper boundary of this long-term channel with Nvidia. Why do I talk about Nvidia? Talk about it every single week, a couple times a week. Why am I talking about it? Because NASDAQ is following Nvidia right now. And again, they've diverged. We've seen NASDAQ make new highs recently, NASDAQ 100. Nvidia has not. It still may. We'll be watching. But that's what they did back in June and July. They diverged from one another. July, NASDAQ made new highs. Nvidia made a lower high. We'll be watching to see if they do it again or not. But again, if we break this trend line right here, this channel, it will confirm a reversal with our earnings, the earnings that we had recently, right off of that major trend line. So again, if this ends up breaking, it could terminate the bull market for the stock market, the AI rally, and for Nvidia. If Nvidia goes back up again, this trend line, we talked about it a moment ago on the daily chart, on the weekly chart, the close-up on it, that would come into play, and that's right at this trend line. So we could even see a new high in the head and shoulders now play out, and then get the termination of the rally. If we get a rally going, here with the holidays and going on into early January, then it could play out that way. But I am looking for a top to complete, whichever way it plays out. The higher high or lower high, I'm looking for rejection surrounding this long-term upper channel line here on Nvidia, and I think that will terminate the bull market. We have Nvidia testing this trend line. Well, we have also NASDAQ, the Dow, the S&P, all hitting major trend lines long-term in their monthly time frames. So something to be aware of here. Just using the weekly on Nvidia because there's less data for Nvidia than what we have with the markets. We have decades and decades of data. I'm also paying attention to the Dow. Is it going to recover here off the 100 period moving average or not, or does it have to go down and go lower? Again, directly below, we do have horizontal support. You got a possible head and shoulders if we go down lower here. As I've mentioned, again, you could have a slanted neckline up like that, or we can have a neckline from this area over here if we get a bigger recovery right now. So a couple different head and shoulder necklines there, and maybe this is a shoulder or this is a shoulder. But again, we'll be watching to see, do we backtest the trend line here on the Dow, the broken trend line, and on the S&P, and then turn down lower? Or do we try to get above those levels? We'll be watching. We're trying to recover off the 100 period moving average after this divergence and that 10-day losing streak. Gave us nearly a 7% sell-off on the Dow. He remains negative. Dow's trying to bounce off the 20-week moving average after the divergence. Again, as I said, it could form a lower high, or it may even get a higher high and go back up and diverge again in the more recent price action with the transports and go higher and hit the upper channel line again. But you've got the divergences going on with the indicators here. With the RSI, we have multiple point divergences. I think Russell's trying to bounce off the 100 period moving average. It was up, it was down slightly today. Again, by just over 0.2%. Again, do we get traction here? Do we have to go down to the trend line in the 200 and see a bigger sell-off before we get a rebound? We'll be watching the Dow and the Russell very closely. They've led the charge lower. The NASDAQ making new highs as they were selling off, and the S&P went sideways. Now the triangle's broken down on the S&P, so we're going to be watching. Momentum is still bearish on the S&P, though. Again, the Dow and the Russell did turn off of their upper channel lines. We'll be watching. Does the Russell rebound back up and diverge with the S&P? Over here, we got a bigger sell-off below the 20-week. Here, we're just slightly below it. Here, we were pretty far below it, and then we rebounded. The 20-week acted as resistance. Do we see something like that happen again, or do we get a recovery sooner rather than later? Does the Russell diverge with the S&P 500? I'll be watching, as it did back at the 2022 top for the S&P and the 2021 top for the Russell. They diverged from one another. Watching the RSIs on the Dow and the Russell here in the weekly time frame. Do we start seeing them hold below 50 or bounce off the 50 level? We'll be watching as we go here into the holiday trading, what happens by the end of the week.